Let's also celebrate our markets. While we did, hit an all-time high once again, or rather got very close to that, just a whisker away. But then closed in flat. And flat is how we spent the better part of yesterday's trading session. While yes, we continue to hold on to those 25,400 levels, but it was a very sedate session. Don't go by those jagged edges. It was a very narrow band from the highs to the lows of the day. Well, some of the select, two-wheeler stocks held out, the likes of Hero MotoCorp, Bajaj Auto. But then again, there was polarization. Tata Motors, Eicher did not. Some of the banks were the ones which were underperformers. But then again, Bharti, M&M, Kotak also did come to the rescue. But I think all action now shifts to Wall Street. You've got the S&P 500, which did hit an all-time high very briefly and then settled in quiet from there. But I think the bigger talking point is that as we await the Fed decision tonight, it seems like it very well could be a 50 bips cut.
So for the first time, there is a debate and there is perhaps a deliberation as to whether 50 is right or 25 is right, because we are going through that phase of the market, because for the first time Fed would be cutting rates post COVID, and do they want to start slow or do they want to start strong and then ease it out? Now it's anyone's guess that what would be the short-term reaction, and I'll tell you why. Because purely looking at the market positioning, stocks at an all-time high, bonds are at levels where they are factoring in a series of rate cuts from now to next December, and commodity markets are the only one which in a sense have not moved in a very typical manner. Now I personally feel that 25 is better than 50, and I'll tell you why. Because 50 means that the Fed in a sense does not feel very strong about the economy. Otherwise Fed would not suddenly start with a 50 bips rate cut. The history of Fed is that they always start with 25. It's only in cases of emergency that Fed has resorted to 50 basis cut. So if a 50 comes through, in the medium term, it is good for emerging markets. In the long term, it would benefit a country like India. But in the short term, for me, that really could be an indirect profit warning or an indirect red flag from the Fed. The positioning of the market is such that markets are at an all-time high. And if the Fed communication is not what everybody is anticipating and expecting, we could see some numbness going forward, at least on the Wall Street.
Yeah, and for the most part, it turns out to be fairly predictive that a 25 basis points rate cut will take place. But this time around, as we're talking about, perhaps 50 basis points is what the expectation is. So whether or not it's going to be an aggressive stance, one needs to wait and watch. We've had a lot of data points as well coming in with respect to the jobless claims, the CPI data from the US, as well as the PPI data. So all of that too will be factored into the decision. But meantime, let's talk about how our own markets as well have been faring, because the cues from D Street are pretty positive. At 25,400, we managed to conquer that mark as we continue to hold out close to those fresh highs that we hit in just a couple of days ago. You are seeing select pockets that continue to remain above, so it's not some sort of a sectoral move on the upside. It's not only your rate sensitives or only your defensives or across the board. It's somehow just very select pockets like capital goods, for instance, or CGDs, newsmakers that have been a buzz in trade, and very divergent moves coming in among the auto stocks as well. Just going by the fact, Nikunj, that at least the trend continues to remain positive while the mid and the small caps underperform. It's no sort of synchronized move when it comes to individual sectors.
See, the action is shifted to the IPO market. All the action, all the attention is so robust in the IPO market. That's where large amount of mind space seems to be going. The listing of Ola, and then what happened after that, how Bajaj Finance has really taken a massive leap forward after a listing. It was circuit yesterday, it was circuit I think on Monday. That I think is the most important communication, which in a sense everybody is really discussing. So that's one part of what is occupying mind space. Second, the policy sensitive stocks, especially which are in the pockets of defense, railways, shipyard. I'm sounding very repetitive with this one, and I'm using the word very repetitive because it is something which we've been flagging off. They've started turning for the worse. Whether it is HAL, 5600 has become where 40, 400. It's almost a 25-30% cut. That similar cut, I think, is visible in this entire packet. So one is clearly getting a sense that the wind is out of the sails, or the momentum is out for a lot of these so-called policy-sensitive stocks in the near term. The theme which in a sense seems to be really making a comeback, and that is good old FMCG, good monsoon, defensive play, sectoral churn. HFCs, I think, have a promise to go higher because interest rate alignment will benefit them. Bajaj Housing Finance will lift the spirits for the entire IPO market. That looks interesting. But then you will really have to get into individual stocks here. You might see a dinky trade ahead of election in autos. You might see a dinky trade ahead of elections in some of the hotel stocks. You might see a dinky trade ahead of elections in some of the consumer durables. That's about it. This market is not lacking any kind of news trigger right now. It's all about liquidity and a little bit of the global setup. Like I said yesterday, I would watch out for the commodity complex because crude has made a comeback. If crude makes a comeback, and if we get a clear indication from the Fed that they want to take interest rates down, that means they are not very confident about economy, which is the US economy. US economy goes down, commodities go up. So I think the next 8-10 day trade would be long commodities somewhere.
Yeah.
If you like this video, then like, share and subscribe to ET Now.